G'day traders, welcome to Market Wrap Up for Wednesday, the 16th of October. So let's start off with the 15-minute chart, which I've just brought up here. So we're always referring to some sort of longer term chart, be it 15-minute chart or a 60-minute chart or a daily chart. At the end of the day, you can use anything you like, but as long as it works well for you and you're consistent with it and keep on using the same chart as you approach your trading. So what we're doing is looking to get a longer term perspective here, mainly for the idea of what's happening over the last few days, what's happening as far as trend, and most importantly what's happening in regards to support and resistance areas. Okay, that's what these blue lines are marked in here. Now if you come into the trading room, you'll see that we're often talking about these areas, showing how to mark them, keeping up to date with where the latest support and resistance is. Now these are discretional support and resistance areas marked based on price action. There's other ways to do it, as in you can have predetermined support resistance area, what they call pivot points, which is like a pre-programmed formula, but that doesn't take into account price action. So we definitely like taking into account what's physically happening in the market. Okay, so that's how we find our support resistance areas, and they're just basically areas within the market that the market keeps on respecting. For example, this one here, it's come down and touched it there. From the come down and found support there, uses resistance point here, resistance point here. So it's an area that the market respects at least 3 or more times, and that's a significant area in the market, and you want to mark it. It doesn't necessarily specifically trade it, but certainly it's something to be aware of. And for example, if we came down to this area here, it's an area that could potentially hold a support, so you want to be careful if you're looking to take a sell trade to go through it. Okay, so we use it more as a defensive mechanism. So this is, you can see the current support and resistance levels at the moment. We've just completed Wednesday, which we're about to go through. I want to show you, I'm just going to add in an area here. So this is the latest support resistance area. I'll do it right here and now. So we've got a top here. As we open up today, nothing really significant happens, but the fact is we've come down and bounced off this area, bounced off again. We can see, market's really respecting that price from the lower side and the upper side, and it's touched it once, twice, 3, 4 times, really, almost to the tick. So we're going to leave that line now, and that becomes significant as far as moving on and trading forwards. So as far as today is concerned, this line wasn't here as we started the day, so you won't see this line on today's charts. The only major support resistance area is down here underneath, where we actually opened up the cash market. So let's go have a look, and we can see overall the market trend is more on the upside. We're certainly over the last couple of weeks. You can see there, each one of these areas represents one day. We've been pushing up. Okay, so we're definitely in an uptrend. So here we are here, as far as we've got the 1-minute chart with the power points laid over the top, and to the left hand side we've also got 1-minute charts. We've got the Russell and the Nasdaq. So we use other US markets as support or as indicators, so we don't specifically trade them, but we use them to give an indication of direction and momentum. If you see a market, other markets, these other markets which are based on smaller volumes sort of breaking through areas, what it'll do is sort of have a lead-on effect to the ES, the market that we actually do trade, and sort of give us some, almost like some future information as far as where the market might be might be heading. Anyway, there's specific ways to be able to use it and interpretate it, and certainly the best way to do that is through the live trading room as we talk about it, as it's happening in real time. So here we are, right here we're opening up the live market. So you do see 2 boxes here. Basically this lower box is just we're boxing the pre-market, the most significant high and low within the pre-market, that point there and that point there. Okay, it does go a bit higher earlier on, but we're not so concerned about that. We're just looking at the first couple of hours of the market. That's when the big traders and banks and institutions start to come in and get involved. So I want to box that. Again, it's not necessarily for a trading, it's just to segment the market. And then you'll see another box up here, and again all this sort of stuff's explained in the live markets. It's just all about segmenting the market and sort of dividing this market into segments. But again, it's sort of we box the 10 o'clock high and lows as well, as in 10 o'clock is a bit like the unofficial opening of the markets. Normally what happens is traders watch the first half an hour of the day. We get the economic news at 10 o'clock out of the way, and then from there people start to make their orders. So this high point or pivotal point, be it on the downside or the upside, is always quite significant at around about 10 o'clock. So stay tuned for what we do around these, whether it's in these market wrap-ups or within the live trading rooms, but it's certainly an effective way to segment the market. So in explaining all that, we've sort of set up the charts now. So what happened is we've come along, we've straight away we've broken outside of this pre-market box. So that starts to indicate some sort of direction, momentum on the upside. We come back and then quickly we're breaking back up again and going higher. So certainly from here the market's getting some momentum and direction to the upside. If you're quite an aggressive trader, you can look at some of these power fades on the upside. But as far as this sort of move, we didn't see it coming as a strong move as what we did have, but certainly, because it's breaking out this pre-market box, it did believe that the market was going to head up, and it did do that. We went up quite significantly. Got this 10 o'clock mark where we've come back with quite a decent pullback of a bit over 4 points here. So from there we put in this 10 o'clock high, and you can see now the market's come back at these highs. So when the market has a pullback like this, it's got direction, momentum. Any sort of power fade back up to sort of test these highs is normally a higher probability area, and that's sort of this region around here is what it's doing. Then the market's pulled back again, and sort of potentially you can look at breakout trades through any of these points. Here, breaking out and going past this 10 o'clock box always has potential. And what you'd do is really look to the other markets as far as are they breaking through. And the fact is, I think definitely on this particular day it was a little bit harder to see this breakout coming, because as I'm looking here at the top of this market, you can see the line in the same area on the other markets. They're sort of hanging back. So normally if the market is going to go higher, you'll see these other markets like the Russell and the Nasdaq sort of already breaking through, or most of the time you'll see that anyway. So this particular day is the market that we trade, the ES market, which actually led these markets to the breakout, which normally doesn't happen that way. Okay, so but again it's stalled at this price. So this 10 o'clock line here, it's quite significant. We've come up. We've touched it once here, we've touched it again here, with the market stalled, and from there it's able to go higher. Where what quite often acts as a good trading opportunity as well is using the power point to go off it as support. So once we've broken through it, there's power momentum there. Look for this particular area to potentially hold to go higher again from. So even though it's gone just through it, if you're looking to trade this sort of power point here, it would have in the end just held before heading back up again. From this point on here, you just really want to look at what's the market doing as far as price action. And what's happening here is the market's stalling. It's come up. It's tried to go through these highs and failed, and really started rejecting these highs and coming back. Again, you look to other markets, and you can see, again, they're not going higher. They're sort of keeping within the range. And from here it's potential that you could get some sort of mean reversion, as in the market comes back within the range. So the market's either doing two things: it's trying to break out and go higher, or come back within the range that it came from. But the fact is, with this particular area, neither or really happened. It did start to come back down a little bit. This area here had a little bit of potential as far as going down and getting a bit of a breakout as far as back within the range. Because it's sort of formed this double top, and then all of a sudden the other markets are starting to really push down. But what really happened was it went pretty much sideways through till 2 o'clock. This is where we stop the trade. We finish up and just trade that morning session, and don't normally do the afternoons. So overall, quite an eventful day. The market's certainly pushing up. Expected a little bit more of a push down, through this reversal pattern, which didn't eventually come, and it's just gone sideways. So that's a wrap up for Wednesday, and we'll be back again to do it tomorrow.